This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Shrugging it off, a mixed jobs report and comments from Russia's president about Syria cause wide swings in the stock market. The question now, is the taper still on for September?
Why 3% matters. The yield on the 10-year Treasury is hovering near that psychological level. But should you care? We'll explain.
And bold predictions. Our market monitor has 4 stocks he says could gain as much as 20% in the next year. So grab a pen and paper because Nightly Business Report starts right now. And good evening, everyone. I'm Sue Herrera in for Tyler Matheson.
And good evening for me as well. I'm Susie Garrett. Well, call it a big letdown for investors today. There were discouraging developments on 2 crucial issues for the markets. Syria, where President Obama didn't get the international support he was looking for, to the jobs report that showed American businesses weren't hiring much in August. Both disappointments caused wide swings in stocks, going from triple-digit losses on the Dow to closing numbers basically unchanged. We begin tonight with the Labor Department's August employment report. 169,000 jobs were added to the economy last month, but that was fewer than forecast, while the numbers for June and July were revised downward. The unemployment rate ticked to a notch lower to 7.3%, but mostly because so many Americans simply stopped looking for a job. Hampton Pearson takes a closer look behind the numbers and how they could influence what Fed policymakers do next.
Joe Porter just got hired as a management trainee in the auto service department for one of the largest car dealers in the Washington, D.C. area. He's been on the job for just 2 weeks, and his boss says he's a natural.
We hire people that have the passion to serve the public, and we want to create a relationship with the customer, and that's how we grow.
Porter says it's a far cry from his job searches of the last several months coming up empty and a series of odd jobs that range from cleaning swimming pools to repossessing cars.
It's awful, trying to support a family and everything else, and nobody wants to give you a chance, and if they do, they don't want to give you what you need to be able to survive.
People like Joe Porter getting new jobs because of a rebounding auto industry is one part of the August employment story, but there is a concern. Even though the unemployment rate is now at a nearly 5-year low, it's happening for the wrong reasons. The labor force participation rate in August was 63.2%, the lowest monthly rate since August 1978, 35 years ago. Other signs job growth momentum is slowing. The Labor Department says 74,000 fewer jobs were created in June and July than previously reported. Some leading economists say it might give the Fed second thoughts about tapering in September.
The decelerating momentum in the job market, and that is an issue, and it will muddy the waters regarding the taper.
Economists say weak data increases the chances for Ben Bernanke and his fellow monetary policymakers to delay tapering. But a possible compromise could be to reduce those bond purchases from $85 billion to as little as $10 billion per month. For Nightly Business Report, I'm Hampton Pearson.
Well, as Wall Street was busy making heads or tails of that jobs report, comments by Russian President Vladimir Putin that his country would continue to help Syria even if the U.S. launched a military strike there sent investors reeling. Steve Sedgwick has more on the G20 summit from St. Petersburg, Russia.
Here at the G20 Leaders Summit in St. Petersburg, it was the issue of Syria which dominated, and the wrangle and dispute between President Putin and his allies on one side and President Obama and his allies on the other. Of course, President Obama is looking for some form of limited military strike against the al-Assad regime, which he accuses of using chemical weapons in a Damascus suburb. President Putin, for his part, believes that al-Assad could not have been responsible for that chemical attack. Elsewhere, this was supposed to be a conference about jobs, a conference about growth, but there were limited economic gains, including agreements on tax, trade and longer-term infrastructure projects. There was also a nod to the emerging markets who are concerned about volatility in their currencies and their economies because of Fed tapering concerns. Well, there was a statement which actually said that monetary policy should be carefully calibrated and communicated throughout the entire world as well, just indicating that there was concern about that Fed tapering policy. This is Steve Sedgwick for Nightly Business Report in St. Petersburg.
Back to Wall Street, stocks eventually recovered as investors chose to focus on whether the jobs report meant the Federal Reserve would push back the start of its bond buying program. As a result, the Dow wiped out a nearly 150-point loss. In the end, the Dow lost only 15 points on the day, but finished higher for the week. The Nasdaq rose by a point, and the S&P managed to eke out a tiny fractional gain. The concerns over Syria sent oil soaring more than $2 a barrel, settling at the highest price since May of 2011, $110.53. And the U.S. bond market rallied with yields on the benchmark 10-year Treasury note falling back below 3%.
And Susie just mentioned that 10-year yield below 3% once again. That has ramifications for a lot of things. But what does it mean for you? Michelle Caruso Cabrera explains why 3% matters.
When Wall Street talks about the 10-year yield hitting 3%, what that means is the U.S. government has to pay 3% to borrow money for 10 years. And that level matters because so many other loans for consumers and businesses are connected to it. Mortgage rates, credit card rates, car loans, business loans, they're set at an interest rate based on the 10-year yield. So when it goes up, those rates go up too. We've already seen it in mortgage rates. Freddie Mac says the average 30-year fixed-rate mortgage is now 4.57%. A year ago, it was only 3.55%. And that means if you buy a $200,000 home now, your monthly payment is $94 higher than if you had bought a year ago. The 10-year yield hitting 3%, the highest level in 2 years, also impacts stock portfolios in significant ways, because that higher interest rate provides competition to other kinds of investments that pay dividends or interest. That's because despite all the controversy about how much the U.S. borrows, the U.S. government's debt is considered one of the safest in the world. In other words, you're extremely likely to get paid back. And because the U.S. government is paying a higher, more competitive interest rate, many stocks that pay dividends have fallen or not advanced as much because what they pay isn't as competitive. Also, corporate debt that pays a high interest rate, what's known as high yield or junk bonds, those have fallen in value as well because they're seen as less competitive. The good news about the 10-year yield hitting 3% is that many believe it is going up because the U.S. economy is getting better. For Nightly Business Report, Michelle Caruso Cabrera.
Here to help us put all of today's news on the economy and the markets into context is Joe Davis. He's chief economist at Vanguard. Joe, always nice to have you on the program.
Likewise. Thank you, Susie.
I want to pick up where Michelle just left off. She said that 3% rate is saying that the U.S. economy is doing better. Is it really, looking at today's jobs numbers, is that reflective of how the economy is really doing it, or the other numbers that we get, like on housing or auto sales, that seem to be a lot stronger? How are we doing?
Well, we're certainly doing better in our judgment than where the U.S. economy was, say, 2 years ago. Housing, as you mentioned, Susie, is a clear example, has clearly rebounded. Consumer balance sheets are stronger. Business investment is higher today than it was 2 years ago. So despite the disappointing news today in the jobs report, it wasn't dismal. And I think the higher interest rates that we're seeing are reflective of a somewhat firmer economy.
But, Joe, do you expect rates to continue to rise? I mean, is 3% a cap on the upside, or are you looking for significantly higher rates down the road?
No, well, I think if we're bold enough to look out for at least a year, I think it's tough to envision the 10-year Treasury, which was mentioned in your report, markedly above 3%. And why that is, I think if you start to talk about higher interest rate levels, you are in a world where the Federal Reserve is raising short-term interest rates. And I think it's very likely that they're on hold at least through middle of 2015.
The other issue that everybody's been talking about, as you know, is about Syria, and a lot of concerns that one way or another we're going to get involved as a country over there in Syria. Can the U.S. economy handle it? I mean, at this fragile state that we're in right now?
Well, I think we can handle it in terms of what is believed to occur. I think, though, however, it will only be able to withstand the impact based upon if it's a limited armed conflict. In other words, the damage to the financial markets and to investment confidence will be commensurate with how spread any sort of scenario would unfold in the Middle East. So I think at present level of oil prices, we're okay. But if we would start to see oil prices, as just an example, $120 a barrel or higher, then I think we would start to see estimates for economic growth for the later this year really come down.
So how do you invest against that kind of a backdrop that you just set up for us so nicely, Joe? Do you still continue to put money in fixed income investments, and if so, of what duration? Or do you favor stocks?
Well, I think, again, you have to first, the key areas around balance, and then it's focusing on what the investor or what the viewer may be trying to achieve. I mean, this has been a long tested just message from Vanguard of, have equities, generally speaking, in your portfolio for long-term growth potential, and you have fixed income to moderate equity volatility, which we had during the day today, as well as to potentially provide some income stream. But as the previous report mentioned, I think the near-term focus on just yield in a rising rate environment like we saw the past several months will underscore that switching from, say, dividend-paying stocks to fixed income, these are inherently different investments, and so investors need to keep that in mind if they're going to make or contemplating large changes to their portfolio.
So we can't put you on the spot here. Vanguard has fixed income funds and it has stock equity funds. Which way should an investor go? Go with which fund in Vanguard?
Well, I mean, that is very difficult to tell. And there are the reasons, Susie, is depend upon your eyes, risk tolerance, and what we're trying to achieve. I think for conservative investors, fixed income, a broad portfolio of fixed income investments, whether they're taxable or municipal, is a fantastic opportunity for long-term investors. And then for those that have a more aggressive or moderate objective, then equities will remain the place to be. And again, regardless of the investor's profile, they have to look through the volatility, which we saw even today, to ultimately achieve the objectives in their portfolio.
Okay. I know it's unfair to ask an economist those kinds of questions, but thanks for going along with it. Thanks a lot, Joe. Have a great weekend. Joe Davis, Chief Economist at Vanguard.
To corporate news now, and Verizon Communications is facing a lawsuit from one of its own shareholders. That suit, which is seeking class action status, claims that Verizon is paying way too much to buy out Vodafone's 45% stake in their joint venture, Verizon Wireless. The suit over the $130 billion deal names the company's chief executive, Lowell McAdam, and all 12 board members as defendants, accusing them of breaching their fiduciary duties. Verizon says the lawsuit is without merit. In a related note to that buyout deal, Verizon is expected to issue up to $30 billion worth of debtor bonds as early as next week, the biggest corporate bond deal ever.
Apple also dealing with some legal headaches today, 2 months after a judge ruled that Apple colluded with 5 publishers to fix prices on ebooks. A tough injunction was issued today aimed at keeping those prices down. Now a U.S. district judge has ordered Apple to modify the contracts it has with those publishers, in effect limiting its ability to set industry-wide ebook prices for the next 2 years.
The chief executive of Ford Motors is going nowhere. But that's a good thing. Alan Mulally says that he has no plans to leave the automaker before his contract expires at the end of 2014. That follows reports that he might be asked to take over the top job at Microsoft. Last month, you might recall, Microsoft CEO Steve Ballmer announced that he would retire next year. But today, Mulally says he has no changes planned going forward.
And coming up, get out your notebooks because this week's Market Monitor says he has a handful of stocks that could see 20% gains over the next year. But first, here's a look at how the international markets finished the day. A $3 billion deal tops tonight's market focus. Looking to capitalize on the telecom boom, American Tower says it'll buy MIP Tower Holdings for $3.3 billion. Now, MIP is the parent company of American Tower's rival, Global Tower Partners, which is the largest privately held operator of cell towers in the U.S. Shares of American Tower added 4.5% to $71.91. Smithfield Foods sold a lot of packaged pork last quarter, but profits unexpectedly fell on weak exports, especially to key markets like Japan, China, and Russia. Revenue rose 10%, but profits plunged by more than a third. Shares were flat today to close at $33.92.
Dow component Johnson & Johnson is in talks with private equity firms and rival healthcare companies to sell off its clinical diagnostics business, which could net the firm an estimated $5 billion. J.P. Morgan Chase has been asked to run the sale of the unit, which could take up to 2 years to sell. Shares of J&J gained just a fraction to $87.16. And shares of online review company Yelp touched a new high today after Deutsche Bank started coverage with a buy rating and an $81 a share price target. Shares closed up nearly 6% to finish at $62.40.
Our Market Monitor guest tonight is still upbeat on stocks, and that despite all of the hand-wringing about Syria, jobs, and the Fed. He's Chuck Carlson, CEO at Horizon Investment Services. Hi, Chuck.
Hi, Susie.
Well, nice to know that somebody is really bullish and upbeat. Tell us why.
Well, one of the tools that we use to discern the market's primary trend, and that's a trend that typically lasts 6 months or longer, is the Dow theory. And the Dow theory's last major signal was a bull market signal when you had both the industrials and transports move to all-time highs in very early August. We regard the pullback that we've seen in August and into early September as merely a correction within a bull market. We think that at some point here it will run its course, and it may be pretty close, actually, to running its course. And we would expect stocks and the major averages to start to trend higher through the remainder of the year.
All right, let's run through some of your picks. And once again, you're expecting some pretty significant percentage gains out of these stocks. First on the list is Cisco. Why?
Well, I know it's somewhat of a controversial stock based on their last quarterly earnings announcement, but the fact of the matter is, A, I think that drop in the price is giving investors an opportunity. B, I didn't think it was that bad of a quarter, and I think there were some reasons why the company's projections might have been a little dour, because I don't think they really wanted to be ebullient in the face of the fact they were laying off some workers in some areas that weren't generating much in profit. So I like the yield, almost 3%. I like the dividend growth. They raised their dividend more than 20% this year. All in all, I think it's a good value right now, and one that I think with the dividend yield and appreciation can be 15 to 20% gainer over the next 12 months.
The other stock that you told us could gain by 15 to 20% over the next year or so is Dover, ticker symbol DOV. Tell us the story there.
Sure. Dover is kind of a multi-industrial mini conglomerate. They have businesses across industrial, electronics, technology, et cetera. I normally don't like companies like that, but Dover does a very good job of managing those businesses. They prune when they have to prune. They buy when they're good acquisitions available. The company's earnings are going to grow at double-digit rates. They just increased their dividend 7%. It was the 58th consecutive year of dividend increases for the company, and you can still buy that growth at what we feel are reasonable prices.
Next on the list is Qualcomm, the chip maker. You also not only see a percentage gain in the stock price, but also the dividend.
Right. Qualcomm raised its dividend 40% earlier this year. The stock yield's 2.1%. You know, we like dividend growers right now. If you're going to play the dividend game, don't play yield as much as growth and try to get that 2% yield. Qualcomm fits that to a T. It's a company involved in the chip business. They have a nice annuity business because of the licensing of chip technology. The other thing I do like about Qualcomm, the stock's trading around $68, and it has barely buckled during the last 5 weeks during this rocky market period. So I really like that resiliency and think this stock could do quite well as the markets resume their upward march.
Chuck, we just have a few seconds left. Tell us about your next one, Express Scripts, which has no dividend, doesn't fit into the formula which you've been talking about. Why do you like this one? And its ticker is ESRX.
Right. Express Scripts is a pharmacy benefits manager, and it is kind of a different kind of play than the other three stocks, but I like it as a play on the Affordable Health Care Act. You're going to see more people coming into the system for prescription drugs. That, in turn, is going to drive demand for Express Scripts services. You can buy that stock at about 14 times next year's earnings, and they're going to grow at double-digit rates this year and next. Okay. So, again, it's that growth at a reasonable price story.
Any disclosures to make, Chuck?
Yes, our firm, as well as our clients, own all 4 of those stocks.
All right. Thank you so much. Chuck Carlson,
Thank you.
CEO at Horizon Investment Services.
As many as 5 million Americans have Alzheimer's disease, and with an aging U.S. population, that number is expected to increase significantly. Many people are unprepared to deal with the financial consequences of such a serious illness, which slowly destroys one's memory. Sharon Epperson takes a look at the financial planning that is needed to support people living with Alzheimer's.
89-year-old Landino DiCarlo, a widow for 20 years, was financially independent for decades. Today, she is living with Alzheimer's disease in an assisted living center.
I get very emotional about this. I didn't want her to go away. It was hard. But the decision had to be done because it was getting too hard to take care of her at home.
DiCarlo's daughter Rita started handling her mother's day-to-day finances a few years ago as the disease impaired her memory. Then Rita met with her siblings to determine who would make other financial and health care choices for her mother, who was unable to make those decisions on her own.
My one brother has power of attorney. I take care of her checking account.
Caring for a loved one who has Alzheimer's can be overwhelming emotionally and financially. In addition to doing research on your own, you can consult with an elder lawyer and a financial advisor.
It's really important for you to have a handle on how much it's really going to cost you monthly, because eventually, depending on how long that person's living, all the assets you have are going to dwindle down.
Basic services at an assisted living center can cost $3,500 a month on average, according to MetLife. But costs can escalate quickly as the level of care increases. The average cost for a private room in a nursing home is about $7,200 a month. Paying for care can be a big concern. Financial advisor Charles Massimo says taking inventory of existing assets is the first step. Then look for other resources.
Do you have a life insurance policy that has cash value in the policy? Do you want to look into doing a reverse mortgage on your home? Again, you want to take an inventory of all the resources you have available to you.
Also do some estate planning while the person with Alzheimer's can still make decisions. Update the will. Assign durable powers of attorney for finances and health care so that someone else can make financial and health care decisions when the Alzheimer patient no longer can. And make sure a living will is in place to direct the patient's health care wishes. After consulting with a few lawyers, Rita says she is confident DiCarlo will be able to continue to afford living here, a comfort to both mother and daughter. For Nightly Business Report, I'm Sharon Epperson.
And coming up, how a teen turned the love of a certain kind of art into a $1 million business. It's a great story. But first, a look at how commodities, treasuries, and currencies fared.
And finally tonight, it's never too soon to start, especially when it comes to starting your own business. You're about to meet a young lady who, as Tyler Matheson explains, came up with an idea that's producing some pretty big money when she was just 8 years old.
So like this one, we made a wedge.
Madison Robinson's braces belie her wisdom.
Be persistent and to always have a positive mind and be open to what other people have to say about your product.
Her product, fish flops. According to her father, Dan, the brand sold more than $1 million worth of retail merchandise in 2012.
Those numbers are accurate, but now we've exceeded those numbers.
This year, sales grew 25%. Now, 50 new designs, due out next year.
When you walk, they'll light up.
They were unveiled a few weeks ago at a Las Vegas trade show. What's a nice girl like this doing in Las Vegas? Missing high school dance team practice for a day to compete with 1,600 footwear labels looking for buyers.
It's work, but it doesn't feel like work. It just feels like it's what I like to do.
When she was just 8, inspired by her surroundings at home on Galveston Island in Texas, Madison combined her original fish art into a flip-flop. Yeah, the flip-flop. That bastion of beachwear, that staple of summer.
And just gave it to my dad, and I was like, look, fish flops.
I knew that it was something special.
Dan Robinson bought a domain name that same day, fishflops.com, for all of $10. But nothing happened for 4 years. He was busy selling T-shirts up and down the Texas Gulf Coast, a hobby that turned full-time in 2003 when he left a job at a regional bank.
I've probably sold 85,000.
In 2010, he decided to cast a line in a new direction.
I kind of came to the realization that she's only going to be a kid for so long. Her designs were created while she was a kid, and so they need to be launched while she was a kid.
With $1,000, he had 9 samples made, took them to a trade show in Florida. He wrote 37 orders, ranging in size from 24 pairs to 72 pairs.
So after that show, I had to make the decision. I'm going to be in business or I'm not. Because to go into production at a factory, you have to obviously make more than 1,500 pairs.
They ordered 36,000 pairs, selling about a third of them in 2011. 2012 was better, but Madison wanted more. Hoping to make a bigger splash, Dan helped her find the name of a buyer at Nordstrom. And she wrote an old-school snail mail letter. What came back was almost too good to be true.
I just read it, and my dad read it to me, and I got really excited.
The reaction from the buyer was, this is very cute, cute product, cute concept, great name, nice young girl. You know, let me see what, we can do with this.
They did plenty. Madison worked with Nordstrom to create 3 unique designs for 64 stores this year. A bit of a step up from Dad's t-shirt business.
I beat him, so that's good.
No wonder this team thinks big.
I think it could become like a lifestyle brand, pretty much.
But on the weekends when you want to kick back and relax, make it feel like you're at the beach, put on some fish flops.
You can make clothes out of the characters, you can make school supplies, lunch boxes, bathing suits, beach toys. I think it could pretty much go to anything you could possibly imagine.
And they're making some good money. I'm sure you're wondering about that, but Madison isn't using it, at least yet. Her father says it's safe to say that he's been able to sock away enough of the profit to pay for his daughter's college education. And Sue, he says that they're going to be throwing the rest of the money into the business. They're expanding into 7 countries.
Fantastic.
And here, get this, they're going to make these kind of fish flops for our age group and also for tweens and teens next year.
Well, you can have the one with the flowers. I'll take the one with the seahorse. My little girls would be all over that. That's a fantastic story. All right, that does it for us on Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Susie Guerra. For more on all the stories we covered, be sure to go to us online, nbr.com. Have a great weekend, everyone. We'll see you Monday.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Guerra with a Nightly Business Report news brief. Discouraging news about the job market today. American businesses added just 169,000 jobs in August, while the numbers for June and July were revised downward. The unemployment rate ticked lower to 7.3%. because so many Americans stopped looking for a job. Traders were able to shrug off that report, as well as intensifying words regarding Syria between the U.S. and Russia. The Dow lost 15 points, the Nasdaq rose by a point, the S&P eked out a fractional gain. Oil prices soared to a 2-year high, $110 a barrel. Ford CEO Alan Mulally refuted reports that he's leaving to take over the top job at Microsoft. And a judge ordered Apple to modify contracts with ebook publishers to avoid price fixing. Be sure to tune into Nightly Business Report right here on your public television station.